Hello traders, hello everyone, my name is Gregor Horvat and welcome to new video surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Euro-dollar, cable, Aussie, crude oil with dollar CAD, and also at the end we will look at gold. Now if we first look at the Euro-dollar, you can actually see that we are making this correction a little bit deeper, but still we were talking about this potential support around 104.80 for the last few weeks, because that was this important swing zone when you go back from the start of this year, when massive orders were most likely executed, triggered because of new position adjustments, so at the start of the new year. So I think that this is pretty significant level. You have also the 38.2%, so it will be quite interesting to see what will be the reaction from here in the next few weeks. Keep in mind that Powell yesterday obviously hinted for potential more, even 50 basis point hikes on upcoming meetings. So clearly this hawkish view actually suggests that inflation is still here, and with this strong economic data we actually could see more dollar strength. So that's why they have to be a little bit more aggressive to bring down the economic activity and obviously inflation with it. The next important data, of course, will be the non-farm payrolls report on Friday, but today we also had another testimony from Powell, but most likely we will not see anything new actually, because there was a lot of said yesterday. So we'll see if now this hawkish view could maybe shift towards the other central banks. Now the ECB obviously could potentially be hawkish as well. They are speculations for the 50 basis point increases on next meeting, and then the next economic data will actually decide if more hikes are needed, or maybe they could slow down. So from an Elliott wave perspective, I still think that this current hawkish view from the Fed is driving the US dollar higher, but we are moving this. We are seeing this price moving into this very nice potential supports here, not so far away actually from an Elliott wave perspective, because as I said earlier, 38.2% is here. Of course, there can be even a massive drop towards the 61.8%, but this will not change the overall outlook, where I think that this major bottom has been formed, and that we will see a continuation higher after this corrective drop is finished. Now, if you look at the 4-hour chart, so far maybe we completed wave B and you're now in a wave C. Now if the first wave A is really extended and strong, like in our case, then maybe the interesting target zone based on FIPS could be the 61.8% of wave A and not 100%. Of course 100% is ideal, but only when you have wave B, maybe at least 50 if not 61.8% of wave A. Okay, so that's the ideal zone. Of course, before that we have this important support at around 104.80. So from a trading perspective, you clearly want to see this, and based on the short-term trades, obviously you want to see this bottom to be formed and visible on the chart before we may act towards the bullish side. So you want to see something like drop below 104.80 and then 5 waves up to make sure that we are bottoming. But for now that's not the case yet. Also same or similar idea here on cable. I think that we are where are the labels here? Okay, that we are at the potential support here for wave C of wave 4. Notice that market here back in January actually retested the highs. It came back to the downside quite aggressively and now cleared out this support at 1840. So I'm wondering if we could see similar failure at these swing lows like we have seen here at these swing highs. This typically occurs in flat corrections but of course still the market is very bearish, is trading to the downside. But I like the idea that we also came out of this triangle, because triangles will usually occur prior to the final move within the higher degree trend. So if we respect this, now this is the higher degree trend, so that was a triangle, meaning that this could be the final leg. Okay, I'm also curious to see what will happen at this lower potential trendline support. Of course, the ideal would be to see 5 waves up through this upper trendline resistance to make sure that bulls are back. Then buying pullbacks would make sense, at least in the short term. For a long-term perspective, again, nothing has really changed. I still think that this September 2022 lows are in, and that we could continue higher at some point this year. Also, I prepared the second wave count, which suggests that maybe wave 5 has already ended here and you are now making a higher degree ABC correction. Even this one obviously is a bullish case, but could see 1.16 maybe retested before market will stabilize. So in either case, we need impulsive quality from that lows to make, from the near-term supports, to make sure that correction, the current one from 2023 highs, has ended. Also looking at AUSD, we are also seeing this one coming into some very important, interesting support. We are close to the 61.8%. We retested these former swings of wave 4, so clearly an important zone here. I'm curious to see if we can get some bullish activity. I still think that bulls will fight back and that bears could have some difficulties down here, especially now when speculators already know what the Fed is planning. Okay, so this current dollar move was actually that occurred over the last few weeks, if not what, almost 1 month and a half, is actually was coming from speculations that Fed will sooner or later have to turn hawkish. Okay, so these decisions that will be made by the Fed could already be priced in. So maybe this resistance on dollar is not that far away, like the price action maybe suggests. So I'm curious to see a response here. I still think that Aussie dollar could fight back, especially if suddenly we see risk on coming back. Then of course commodity currencies could benefit from there. If from any reason, let's say that dollar is just will keep rising with US yields, then of course I would probably look at dollar CAD to be one of the most interesting potential currencies for more weakness, CAD for more weakness, dollar CAD for more strength, because I assume that we completed this triangle here in wave 4 because we broke several swing resistance levels. First one was here, also a broken trend line as well, not only swing high. Then we also had another resistance which I marked as a bullish level right here. So I think that we are now at potentially short-term resistance, but buying dips here would make sense, especially if stocks will not be able to recover. So I think that dollar CAD, before we may call bears back, maybe we can even revisit these highs here, because keep in mind that I know that this somehow is diverging from the Aussie, but keep in mind that RBI is hawkish because the inflation there is not coming down that much. But in Canada, we have a different story. We have inflation coming down, and Bank of Canada already repeated in the past, a few weeks back, that they are stopping with hiking rates, while we have the opposite here from the RBI. So I think that CAD could see potentially more weakness, but also not only CAD, the important for Luni is obviously crude oil as well. Crude oil came to the upside recently, but not really breaking higher much. We actually have seen a rejection from $81 per barrel, so I still think that this is ongoing triangle and that we could see more weakness, especially if risk-off will stay here. Then I think that sooner or later this crude oil will break the supports and move out of a triangle would probably make CAD very weak, in my opinion. Looking at this 4-hour chart, the substructures of the triangles are quite clear here, in my opinion. We had this wave A, then you had a wave B that moved to a new low, which is allowed in a running triangles. Then you had another 3 wave rise for a wave C, sharp drop for a wave D that did not break to a new low, but afterwards you had another 3 wave rise. And earlier this week we highlighted this as important resistance around 81, and so far you can see a very nice and strong sell-off, which in my opinion could have potential legs for further weakness while we are trading below this 81. If 81 is broken on a daily close basis, then I'm afraid that we go maybe even towards 83, 84. Still be chopping around in this massive fourth wave. But based on the short term and latest reactions, I just assume that if the upper trend line, upper side of this range holds, then we could maybe revisit the lower side of the range. Okay. Also looking here at this market from this candlesticks perspective, you can see a very nice bearish reversal candlestick here, possibly very similar like it we had one here back in, this was back in at the start of January. Even some bearish reversal was formed here at the end of January, right? Even this one was quite significant here. This was at the start of December. So you can see that at the start of the month, okay, we have some very nice bearish price actions here on crude oil that came from that candlesticks formation. So we have now also very nice move to the downside, and I think that we could potentially see more weakness here, at least in the short term, to maybe retest this 74 swing support. But if we can break this trend line connected from December levels, then I think even more weakness could be seen. So in the short term, I think that crude oil has more downside potential here. Now let's take a look at the final market, which will be dollar CAD. Now, sorry, gold. Now gold here is somehow trapped in this very big range, but in my opinion still potential flat corrections can be finished in a wave 4. So I think that when the US yields, which are here at the bottom, will potentially complete the wave 5 and we will see a turn to the downside, that's when the US dollar could drop and potentially make this supportive case for gold. So we are now in a corrective phase here on gold, at least in the short term, and it looks like that there is slightly room for further weakness because of this latest price action. Notice that that was very nice bounce, but really didn't help much here with the bulls, because Powell obviously made it stink and turned things around. In my opinion, potentially we are now dealing with a wave C that should continue lower and even potentially break these February lows. First support is at 1780, and then you have at 1740, where you have also this 61.8%. Also this one matters because we had this wave 4 swing high here, wave 2 swing low here. So this appears like a very nice attractive zone, but before that we already have this 50% and a lot of noise here when you look back at December levels. So the question is from where we get these 5 waves up. Okay, I think whenever this one occurs, there could be opportunity for this market to chase some upside, to chase to the upside. Traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you next time. Bye.